Good morning, traders. So there unfortunately isn't going to be a whole lot to see here on FedEx this morning as they are tanking after their earnings announcement. We had bullish paper trades set up for this. Again, these were not trades that were designed to show, in my opinion, let me get FedEx up here. These were not trades that I would have chosen to make because they're too close to the money. But that's why they were paper trades. But I wanted them to illustrate how the two different types of trades work. That said, I mean, we're looking at a pretty significant drop here this morning from approximately 282 down to 248. So a 30-some point drop over a 10% drop. So what we're going to see here is this dashed line, of course, which represents the current price, is going to end up coming all the way off our chart over here. At the same time, the one thing we will be able to witness is we should witness this T0 line, this solid line here, is going to contract. It's going to drop quite rapidly because of the drop in implied volatility here this morning now that earnings have taken place or been announced. So the couple things I want to watch here, unfortunately, these are both going to probably be pretty much at max loss right on the open. So we're not going to be able to see much about how these two different types of positions move in this environment. But again, the thing we will be able to watch and learn from is I want you to specifically watch how these T0 lines move. They're going to drop very, very rapidly, and you're going to see volatility is going to shrink way up on this. So those are the couple different things to take a look at. We're a few minutes before the open right now, so I'm going to go ahead and pause, and I'll be back right at the open so we can watch and see what happens. Okay, so here we are about 15 seconds away. I'll get my face out of the way here so we can see the full screen. Again, we're going to see both of these numbers go to big losses right on the open. And there's our opening bell. So we're going to, as soon as it starts registering, we're going to see these bars drop down considerably. And we're going to see the T0 line drop. The open took place and that dropped. So it does take a little bit for the volatility readings to catch up. But again, the main takeaway here is this trade went hard against the position. And we had on two bullish positions. One of them had more risk than the other. And we can see that both of them have essentially, for all practical purposes, hit max risk based on this massive pullback here this morning. So that's kind of where we're at. I did do a quick screen refresh, and we can see here that this is down 582. This is down 367. Again, we're so far down that I can't even enlarge my range to get that original position back on the table there. Our implied volatility has adjusted now. Remember, this was up around 87, somewhere in that range, so it's dropped considerably. It will continue to drop quite rapidly. These expirations are Friday of this week. Of course, there's not going to be a great deal of trading the rest of the week, probably because of the holidays coming upon us. So that's where this is at. I just wanted, it's a good compare and contrast to see these two different positions, to see how, in this case, let me get back to the top here, the bull put spread compares to the bull call spread. Again, both being bullish trades when the market goes hard against. So that's it for today. Take care, everyone.